So, Joseph, we've had more declines in Russian stocks this morning as sanctions from the US bite over the situation in Crimea. What's the latest?
Well, it's really what those Russian companies should do here. The sanctions were against individuals in President Putin's sort of inner circle. Some of those individuals have ties to the companies whose share prices have fallen today, but the companies themselves have not been affected. And yet, with the MICEX index at less than 5 times earnings, and a huge constituent like Gazprom at 2.5 times forward earnings, these are rock bottom valuations. We have to kind of ask the question, where are the really big share buybacks? Because surely this is the moment to do it. If those companies think that the market is really undervaluing future earnings and sanctions risk and so on, well, pile in and send a strong signal.
And have they been doing that? Have they been buying their own shares?
Well, I mean, if you look at Gazprom, for example, again, it's a big company, and yes, maybe it's different because it's state-owned. And yet they've hinted at doing buybacks before, considering how rock bottom valued they are, but they've never come through with it. But Novatek, for example, which is an independent oil and gas producer, that did begin buying back shares this week in response to the Crimea crisis' effect on its shares. Now it's interesting, however, because Novatek has still fallen quite a bit this week, and since the Crimea crisis began, its shares have fallen about 20%. About a fifth of that company is owned by Gennady Timchenko, who is an individual on the sanctions list, and is also more famous for co-founding Gunvor, which is a trading house, in fact the fourth largest oil trader. So you have this web of connections tying Novatek to Timchenko, and through Timchenko possibly to the Kremlin. And if you are a foreign investor, don't look at whether they're buying back the shares. I mean, sure, that may help, but it's really the risk you face understanding what's going on here.
But taking a step back and looking at the bigger picture, shares across those Russian companies have fallen sharply because of this crisis. Now, brave investors might say, great, there's a buying opportunity here. You look at what's happened in Greece, which fell very sharply during the Eurozone crisis, and it's recovered very nicely over the past year or so. Is this not a great buying opportunity in Russian equities?
I don't doubt that hedge funds will be looking for sort of blood on the streets, and either investing in, blown up share prices or, Russian government bonds, as happened in Greece. That was a really big trade, I agree. But this is a seminal moment, I think, for Russia's relationship with the West. You have to remember, for the last 10 years, Russia gradually rehabilitated itself as a place for foreign investment. And people were always very unsure, bluntly, about the political risk that was lying there. And now, if it looks like there are going to be sanctions of long duration and quite considerable complexity, if they grow beyond individual asset freezes, for example, and if the Kremlin sees itself as penned in by the West, and it's quite willing to have a long conflict, essentially, involving financial warfare, this is very different from like a turnaround scenario where value investing makes sense.
So very cheap shares, but an awful lot of risk still as the situation evolves. Joseph, thank you very much.